Good morning, Far East traders. This is Greg Mikulowski from FXDD, and it is Wednesday in the Far East, Wednesday, March 31st, 2010. And this is the Far East Forex report. Normally I do a New York end-of-day report, but I was very busy here today. Lots of things going on, lots of head down, doing some homework. So I was not able to get to the evening report. So I thought maybe I'd come in late and see what the markets are up to give a little technical run now. Before we get any further, let me remind everybody that trading Forex can be risky and should only be done with risk capital that will not change your lifestyle. Traders could lose all their risk capital trading Forex. FXDD does not guarantee any recommendations made within this commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXDD does not guarantee the accuracy of the information. We do have some statistics coming out here in just a little bit. In fact, we have key statistics coming out of Australia with the retail sales. The expectations are for a gain of 0.3. This is after a pretty good 1.2% rise last month that negated a minus 0.7% decline in the previous month. But really, 3 of the last 4 months have been up. This would be the 4th of the last 5. If we do see a gain, once again, the expectations are put at 0.3% rise, and the market is certainly starting to anticipate that the market that we may get a better number, and also that the Reserve Bank of Australia may look to tighten credit conditions in their April meeting. From a technical standpoint, this 91.94 level has been a key level for us in this currency pair. If I zoom in a little bit here, you can see going back over time that this level has been a level of, especially off the hourly chart where the market, I don't want to use that one, I want to use this, where the market found some resistance and or support. You can see along this line here, just put a line in at 91.94 and then go back in time off the hourly chart, and you can see a number of instances where the market either had support or had resistance against the level. And today we did also move that we used it as support, then we moved down, and then we moved back above, and currently the market is is trading back above at 92.01, just above that 91.94 level. Now, the high for the day came in around the 13 or 14. Let me see here. Came in at 14 level. There is a old high coming in or a resistance at 92.27. Also, this high from a couple weeks ago came in at 92.51. So that will be levels to get through on the top side. The 27 level, the level that I outlined in that hourly chart, actually comes off the trend line. We have 1, 2, 3 different areas where the market use this as a trend line, and this would be the 4th. So 92.27, we've got to get through that level and then get through the 51 level in order to push the market higher. If we're not able to get through that 51 level, or not able to get through this trend line, look for further correction here in the Aussie versus US dollar. Where might we go? Well, from a Fibonacci retracement level, 38.2% of this move to the upside, which has been a pretty good run here over the last few days, taking the price from 90 down up to 92.13, would take the market down to 91.38. We also have the 200-hour moving average, which comes in at the 91.42 level. That would be probably the first target that the market is going to look for. Off the 5-minute chart, you can see how this run to the upside. Use that 100-bar moving average. Just watch the blue line. Watch the blue line. Look at the blue line. See, we had a little dip below that line. But for 2 days running, the market had moved higher, and then in the afternoon session here in New York, the market gave way, but then has since started to rebound back to the upside. It's just a normal correction down to down in the currency pair, and it was nothing to be concerned about. But certainly, we're going to be watching the 91.94 level on the downside. The 100-bar moving average is 91.87. That may also give you a clue if the market goes below there. Let's move to the dollar versus yen. Dollar versus yen had some resistance here coming into today's New York session. And then it started to move above that resistance, and then it uses as support here. This old trend line comes in at 92.71 currently on the hourly bar, and the market is trading up toward the highs that we saw last week at 92.94. We actually moved above that level, extending the range for the week. And where is real key resistance for the dollar versus yen? That comes at the 93.12 level. You can see this represents a 50% retracement. What's it the 50% retracement of? Well, I'm going to have to zoom in here, not that far, and take a look at the high from 2009. The high from 2009 came in at this level right here, and the low for 2009 came in at this level right here. The midpoint of that range comes in at 93.12, and that's where the market may be going here in the dollar versus yen. Look for resistance against that level. If the market breaks through the 93.12 level, put a line in on your chart, put it on the hourly chart, get to that level, look for further moves to the upside. For the dollar yen, if it is able to hold, then look for further corrections in the dollar yen. We did get above the 200-day moving average last week, and the market has maintained its bid. A break of 93.12 would look toward this high as the next level of resistance. That comes in at 93.77 for your guide. Let's go on to some of our other major currency pairs, including the euro versus the US dollar. And the euro versus US dollar have moved down and tested the 100-hour moving average here in New York trading, and then we consolidated here, and we just went up and tested the highs at 134.37. Actually, the price went up to 134.38. What's the significance of that? Well, if you go back to yesterday, we had a lot of lows here, and why did we have lows there? Well, if we go back to the daily chart and take a look at the daily chart in the dollar euro versus US dollar, and you come back and you look at these periods, in particular right here, March 2nd, the low is up 134.37. The low here is 134.51. Low here was 134.44. Each of these little bars had very big tails, suggesting that the market was not ready to head down toward that level. In fact, they had support here at the 134.82 level, which is the 61.8% of the 2009 high to low range. So the market tried to break through that level, bounce, 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 and now it becomes a key level once again, 134.37. That's why we're seeing this resistance at the level, and that's why we saw the market do something like this during this session, come up to the 37 level and come back down to test the 100-bar moving average. This is a telling chart right here. We're in between our goalposts. We have our 100-bar moving average at 134.16. That level needs to be broken to the downside in order to see further downside pressure, but right now it has not been able to do that. On the upside, this 200-bar moving average and the 37 level are starting to converge, and clearly if we were able to get back above the 37 level, we could see the market head up toward probably around this 134.66 level, a 50% retracement of this move down from this high to this low. Sterling had a for those people just getting in, had a pretty good day to the upside here today. It was it did not give much away here. There's a 50% retracement of this last move down from the high that came in on March 17th, moving over, getting to the low on March 25th, and the 50% retracement of that move did come in at the 150.89 level, and that's currently where more or less where the party is taking place right now at 150.93 after dipping lower. We did spend a lot of time in the New York session on an hourly basis above that level, and now we're looking to move back higher. So for whatever reason, sterling versus US dollar remains to be pretty well bid out there as it starts to correct higher and continue to correct higher. So taking a look at the 5-minute chart, you can see here how the market corrected in the New York session back down below this 84 level. Remember that level at 89.90 level. So we broke through the 90 level, and then we broke through this 84 level, and that started the correction down toward the 200-bar moving average. Although the market moved a little bit below that level over time, those two moving averages started to converge here, and the market has since started to move higher using the last 200-bar moving average as support, moving back above the 89.90 level. So we're watching that level very closely here in the sterling versus US dollar. Finally, let's take a look at the dollar Swiss. Dollar Swiss is in between our goalposts. It went up and tested it was using this 200-bar moving average as resistance. You can see all the times that the market went up and tested that level. Each of the time it got up there, it could not get above that level. We had a few little breaks to the upside, but not able to close above it. Finally, the market was able to push through at this point at 106.33. Went upward. Went right up to the 100-bar moving average, and that's going to be our resistance now at 106.70. Market's in between those two moving averages. The 200-hour moving average is 106.37. So at 106.57.6. Look for buyers against this level, but look for sellers against that level. Let's take a look at the 5-minute chart, see if we see any clues from that. And we're also in between our goalposts here. We got the resistance at 64 on the top side, and we have and support at 48. So really, we're within about 10 pips of each of those different ranges on either side. You can play the 5-minute chart, use the hour bar as a confirmation. That is, if it goes through the 48 level here, we're going to see the market go through the 37 level here to confirm to the downside. On the top side, if we're able to get through the 63 level here, we're going to need to get through the 70 level on the hourly bar in order to confirm the upside. Get it? All right, we'll talk to you later. Bye-bye. Have a great evening. Good luck with your trading. We'll talk to you later. This is Greg Michalowski from FXDD.